Hi, everyone. Dan Eisner here from ZLC Employee Benefits Solutions. My passion is to work hard to find better ways for employee benefits. And I do this by partnering with finance and HR leaders in the market and by leveraging my relatively unique profile, my 20 plus years of experience as an employee benefits advisor, and my skills as the only chartered professional accountant working in this industry in the local market. So welcome to another one of my podcasts. So undoubtedly, you've heard lots about what to do for employees to attract them, to retain them, to engage them. But I'm betting you haven't heard much before about what you should do for them when they leave, particularly what should you do for them around their employee benefits program. As always, I'm going to give you my thoughts, but I'm really interested to know what you think. In particular, do you proactively support your employees when they're leaving around their employee benefits options? If not, why not? Also, if you'd like to hear and want to learn more, be sure to hit the like button or follow me on my LinkedIn business page to be notified about other podcasts to come. Okay, so let's get started. So undoubtedly, we're living in unprecedented times with record unemployment levels, quiet quitting trends, and now the threat of a recession. The risks around employee turnover continue to be high as we see employees leaving organizations for a variety of reasons. Some based on their own decision, while others are based on the employer's decision. When employers choose to terminate employees, such as termination with cause, most employers simply want to cut ties cleanly and keep it simple. However, in other situations, there may exist good reasons for an employer, soon to be ex-employer, to be more proactive and helpful. Even though employees may leave, they're often still your brand ambassadors, and how you treat them on the way out the door might influence what they say about you in the future, either directly to others or via the various social media channels. In today's highly competitive marketplace, departing employees might also return to you one day sooner than expected, particularly if the grass is not necessarily greener on the other side. With all terminations, whether they're voluntary or not, there may be reasons why an employee wants or needs to continue some type of benefits program after terminating their employment and thus terminating their coverage under your group employee benefits program. So here's a list of common benefits employees might consider converting and general rules around the conversion processes. So life insurance. So all or a portion of an employee's group life insurance benefit may be converted to an individual policy with your current group benefits carrier. This is governed by the national guidelines set forth by CLHIA, and employees can convert their current amount of life insurance up to a maximum of $200,000. Now, the cost of this individual policy is going to be subject to the employee's age, gender, smoking status, the amount of coverage, type of policy, okay? But under this conversion process, there's no requirement to submit any medical evidence to qualify for this coverage. So even if the costs for this policy are extremely high, this could be invaluable to employees with pre-existing medical conditions who might not otherwise qualify for life insurance coverage, or if they've struggled to ever qualify before. So that application and the first payment of premium must be received by the insurer within 31 days of the group policy termination. Okay, next one, long-term disability. So this is a lot less common, but some policies still allow employees to convert all or a portion of their group long-term disability coverage to an individual policy. So think about it. If an employee is leaving to pursue self-employment or is joining another organization that may not provide disability coverage or may provide insufficient disability coverage, converting some level of their current disability coverage could be important to provide them some ongoing income protection after they leave. So plan sponsors, you really need to refer to your group benefits contract to confirm if this is a feature available with your current insurer. If it is available, it's likely that the application and first payment of premium must again be received by the insurer within 31 days of the group policy termination. So the ones that people are most often interested in are extended health and dental. So individual policies for these benefits can be purchased from a number of insurers in addition to your current group benefits provider. Now, let's be clear, the term conversion is not necessarily accurate because your employees cannot continue the exact same group coverage that they're going to be leaving. Group insurance available through an employer is always more robust than individual insurance policies. However, again, employees can purchase an individual policy without having to provide any form of medical evidence to qualify for that coverage, And again, for those people that may have pre-existing medical conditions or health issues, this could be invaluable. Okay, they can also, apply for the coverage within the stated timelines, which are usually 60 to 90 days after their group benefits coverage ends. And a big one here is, while it might be convenient to convert with your current group benefits carrier, employees should know that they don't have to do that. They could actually look at other group benefits insurers, because most insurers are generally willing to respect those same 60 to 90 day timelines, without having to provide any medical evidence. Okay, sidebar note, emergency out-of-country travel, which is usually part of the extended health benefit. Your employees may have relied on that when they were traveling outside of Canada and may not have ever had to purchase any other individual travel insurance coverage. So they may have forgotten about this. So they need to be reminded that this coverage terminates and that they should consider a personal travel policy if they're considering any kind of travel after employment ends. And lastly, retirement plan. So where you may provide some type of group retirement plan, for example, like a group RSP, there actually might be an opportunity for your departing employee to keep their assets in your plan. So by doing so, they would continue to benefit from the generally more favorable investment options that you provide and the lower investment management fees. You would benefit by retaining assets in your plan, which helps you have leverage with the carrier for future adjustments to your investment management fees. So again, here, as a plan sponsor, you really need to take a look at your group retirement contract, or talk to your service provider to confirm if this feature is available from them. So like I mentioned earlier, I fully understand that where an employee is terminated for cause or voluntarily leaves under bad terms, an employer might not want to be very proactive. But in a lot of other situations, it might be valuable in the long term to extend support as an employer to your departing employees. At the very least, these conversion provisions should be available to employees somewhere to reference, most often inside of the plan booklets. In some situations, it may also make sense to run any termination scenario past your legal counsel to ensure you're meeting all of your statutory or common law requirements. As well, if you're looking to do any type of benefit continuation, you might need to get your insurer approval to provide that type of continuation beyond any provisions that are already built into your contract. Okay, those are my thoughts. I'm really interested to know what you think. Was this advice helpful? How does this compare to what you're hearing from your current advisor or what you might have heard from other advisors in the market? In particular, has your current advisor provided you any specific assistance in this area? If so, would love to know what it looks like. Please let me know your comments. As I said, I'm always interested to know if there are other current topics that you'd like me to cover in future podcasts. Let me know what's bothering you, keeping you awake at night with respect to your employee benefits plans. So thanks for joining me today. Be sure to subscribe to my YouTube channel for a notification on the next video podcast. As well, you can follow me on my LinkedIn business page, which is Dan Eisner, Employee Benefits Advisor, and all that information will come up on the screen in a second. Thanks so much, everybody.